Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. Okay, good morning, everybody. Welcome back. Happy Monday to you. Hope you're doing well. Hope you're trading safe. And in these crazy, crazy markets, man, we have something interesting. I've been talking about it nonstop. Seems like we're starting to have it happen, which is the turnaround in stocks. At least for now, we've got a nice, strong start to the week. NASDAQ up 1.5%. 1.18% for the S&P 500. My portfolio is rejoicing today. I bought a lot of stocks here in the last few weeks, and now looking for an opportunity to trade the breakout here. Looking really good for a constructive start. I mean, take a look at the weekly chart here. You can see now that you've had the capitulation, the flush down on the NASDAQ, and then the bounce back and the hold last week, this is looking really constructive, in my opinion, for some further upside. Just a quick plug as we get started. Remember to check out DNA Funded. If you're looking for a funding program to try out this year, I would highly recommend you consider DNA Funded when looking through your options. They also offer our stream viewers a discount, A1T20, like you saw in the promo here. Don't miss it. There is a nice extra discount available with our subscriber discount code that we've shared in the chat right now. So weekly chart looks healthy, right? You've got an uptrend here, a couple down weeks, right? This was an ugly period in the market. And I've been talking about this on repeat, how I think that the market freak out here is mostly based off of the idea that we don't have certainty, right? And to me, that is not always a reason to sell the market. So the market freaks out when it doesn't know something. It says, oh my gosh, tariffs, what are they going to do? And we still don't know, right? But what the market oftentimes does when it has a question mark is it absolutely assumes the worst case scenario. And in most cases, not always, in most cases, the worst case scenario doesn't actualize. Does that make sense? Tesla's up 4% free market. Music to my ears. I have a good position in Tesla, and we are sitting on a nice gain so far. We'll see if that can continue to break higher with the NASDAQ. Again, this Tesla, is a NASDAQ true stock. It is, people call it a car company. I would call it more of a tech company and an energy company and an AI company. It's a little bit of everything. But anyways, NASDAQ looks really healthy, right? Key resistance levels that we've been discussing on this channel quite a bit, getting tagged here and breaking out. Here's what I want to see today. From a price action perspective, I would love to see a strong break and closure above this previous week's high. That is a really constructive signal that we may have, at least for now, put in a low on this market. You've got a nice higher low here when you get granular on the 4-hour chart. If we just zoom down for a second to the 4-hour chart, you can see the pattern here that's starting, which is we are putting in very timid, but there is higher lows in this market. And then you had a big resistance point that kind of plagued this market all week. Well, market gapped up to that resistance and then pushed through that. Now, the one concern is that with this big push higher, we've left a little bit of a unclosed gap. There's a possibility that this market goes back to retest this area, at which point I'd be really curious to see if we can see some follow through on this market. But looking really good so far here this week for the NASDAQ, for the S&P 500. Let's take a look at the dollar index. Dollar index still just hovering in this no man's land, this consolidation zone on the 4-hour chart. You can kind of see this resistance point here, and you can see the support level here. We've really just been back and forth, indecisive here. And I think that we're going to really have to wait to see what this week brings. We have PMI numbers this morning, which I think are worth preparing for in what time do we have it at that? 9:45. So in about 20 minutes, we have some PMI data coming in for the United States. PMI data for, let's go through Europe just really quick. So we had better than expected manufacturing for French, as expected for services for French. German, better than expected manufacturing, but softness on the services. Wondering if that is bringing the DAX down. Yes, it is. And then at the same time, you have European flash manufacturing. PMIs came in a little bit better, but services a little bit soft. For the UK, services were up. So euro pound, I'm going to guess just that it's down. Yes, it is. Very nice. We have sell positions on this one, so I would like to see it continue lower. So it seems like a little bit of slight upbeat data for the UK in relation to the euro. So very granular, not very big outsized moves on these ones, but some interesting mixed data, I would say, for PMIs out of Europe. We, of course, have US to follow here in about 15 minutes. That will likely move the dollar. And then we have the Bank of England's Governor Bailey speaking this afternoon, going to be evening time for UK residents. So interesting stuff to start out the week. We have some PMI data, but really what I think is going to be impactful to this market is inflation data on Friday. You have core PCE numbers coming out. But more importantly than anything right now, guys, the countdown to that April 2nd deadline. Now, if you recall, if you've been watching me regularly, I have been discussing the April 2nd quote unquote doomsday, where so many people are so afraid of this April 2nd date, because this is supposedly the date in which case the idea is that Trump is going to impose retaliatory tariffs on lots of different nations. Now, the reason I say that's quote unquote doomsday is because a lot of the news headlines are pointing to this April 2nd as like the end of the world, that the stock market's going to crash. But what we see in markets, and I have been slamming my fist on the table with this concept because everybody seems to be ignoring this. The put to call ratio screams, that this market is all bearish, right? So many people are so scared. Everybody is concerned that this is going to be the day. Everybody's eye is focused over here, but you can't look where everybody else is looking, right? Everybody's so focused on that April 2nd date. Meanwhile, what's the market doing? The market's showing you signs that it's trying to bottom out. Is that a guarantee that it goes higher? No. But I've said this for the last week or so. I think the low is already in for the S&P 500, at least for the foreseeable future. Like for the next few weeks, I would be surprised if this market tanks through the lows. Could it happen? Of course it can. I'm not a crystal ball fortune teller, but my probability thinking, right, my educated guess is that we've bottomed out. And I've been saying that since over here. Like, I really think that we have started to bottom out, because what the market often does is it looks at these big events and it sells off first, right? It says, oh my gosh, that is the end of the world over there. We need to sell now. Sell, right? That's what it does. And then what happens is that as the date gets closer, the worst case fears that everybody was fearing over here don't seem to be coming to fruition. On Friday, Trump mentioned the word flexibility. He mentioned flexibility on some specific tariffs. He was pressed in a conference about, the upcoming deadline, and he said there would be some flexibility. Any kind of quote unquote flexibility or resolution, this market is going to cheer, because if there's flexibility, it's not going to be the worst case scenario that everybody has feared. Again, I am pounding my fist on the table with this because it's something that happens over and over in markets. People get so scared and they sell everything, and that can leave opportunities to buy that fear. So that is why I am looking for more upside on the S&P 500 and the NASDAQ. I've been buying stock shares. I'm looking for a long position on the NAS and the S&P 500. And I think that most likely the market is bottoming at this time. Again, that's not a widely held belief. Everybody I watched this weekend in the market seems to be pretty bearish, saying, this is going to come up, put in some kind of lower high, and we're going to go take out those lows and continue. And maybe we do. But at least until that April 2nd date, maybe that is the day that we start to see the market actually start to go down. But I think that we've bottomed for the short term. And that's why I'm looking to take a potential trade. I think the risk reward still looks really good for the bulls. Nick, you're in an EG sell, right? Yes, I have a dollar cost averaging short position on euro pound. It is really boring. I have a tiny position. I've sold 1, 2, 3 different times. I'm looking to close out for a small profit soon because I don't love the trade as much as I did. There's not too much commentary there. It's a choppy range bound chart. I sold a little bit, sold a little bit, sold a little bit, and I'm looking to close out pretty soon. So, what's more interesting is I have a silver position on right now. So I went long silver this past week, pulled back to this level, been watching this level for some time, tagged it. I went long. EdgeFinder confirmation was there. We do still have silver bullish ratings here, gold bullish ratings here as well. Euro and pound are also on the watch list. So I'm watching silver here closely because I think that we may have also been pulling back here on the metals. Gold still has potentially some room to pull back. I did end up getting taken out for a profit on my gold trade on Friday. I'm not as interested in riding gold here. I actually think that there could be a little bit of a catch-up trade for silver here. Though if gold gives me a larger pullback this week, if we do see metals lower this week, I'm actually really interested in potentially establishing another long position on gold. Definitely going to watch that going forward. So watching gold, I think that it's likely to continue higher. I wouldn't be surprised if we just shot off into the sky. But from a bullish perspective, I would like to see if it can come down and give me a little bit better of a risk reward profile by pulling back into a key level of support. So I like gold quite a bit. I also like silver. Like I said, long silver. I have a stop below this structure. If we fail out here, if we start rolling over and metals see a bigger kind of correction, then I'm just going to stop out on silver and move on. It's not a huge position for me, but it is a trade that I'm watching close, and it looks decently good out of the gate here this week, up about 0.6% for silver. Off the daily chart, this looks really healthy. So I like this. I like this trade quite a bit. Again, key thing here is confirmation from the EdgeFinder. And one thing I've got to point out is that the NASDAQ is getting a bullish rating here on EdgeFinder. COT data came in real strong for institutional positioning, right? We saw big accumulation. We can actually pull that up. Let's take a look at our institutional positioning here to see what big money was up to. You can actually see they bought gold, they bought NASDAQ, Kiwi, Euro, South African Rand. On the sell side, US dollar, Aussie dollar, the Nikkei, 10-year treasuries, silver, Russell, sold little Swiss franc and Dow, and the Japanese yen. So that's your institutional positioning. COT data showing us just kind of the flow, the latest flow of money in and out of key charts that we all watch, right? So a little bit of accumulation in gold in the NASDAQ. So I am really interested in the NASDAQ. I already have a good bit of tech exposure here. Like I have a list of stocks here. You can actually see my positions. I'll show you. This is what I'm in right now. I bought a whole bunch of stuff. But if you notice the key thing here about what I bought, most of it is pretty risk on tech-centric NASDAQ stuff. So I bought things like Fortinet, PayPal, Uber, Airbnb, NVIDIA, Google, Tesla, Amazon, Salesforce, Home Depot, and Intuitive Surgical. IGV is a trade for me. This is a software ETF. So if I do IGV, this is the sector ETF for software. I took this off of a weekly chart level. Huge level of support got tagged here, and I went long. This is definitely more of a position trade for me because this is, my stop loss is pretty wide. I do think I might trail that stop. If we get a nice breakaway move here, I'm probably going to trail that stop or just trim it to reduce risk on the position. In fact, I might actually do that today. But we've got a nice profit on this one. I'd like to see this thing continue to move higher. But yeah, software, good position for me. Nvidia, I'm back to break even after all this time, man. This is just crazy. Nvidia has gone sideways for a good chunk of the last year, but I was able to scoop up some more positions, averaging down here on my position in Nvidia. So again, looking really strong out of the gate here for the Nasdaq. Let's see how this week progresses. Let's see how today's candle looks. But I may actually drop down lower time frame, maybe look at the 4-hour chart and see if I can get a trade entry today on the Nasdaq. But looking really sharp, looking strong, like I said, out of the gate. Okay, public service announcement. The EdgeFinder. You guys ready? I love being able to say this. The EdgeFinder this week is free for everyone who is watching right now. 1 week, free to use to the public. Let me clarify this, because every time we do this, there are people who get upset with us. We are offering the EdgeFinder today until next Monday, free to the public. After next Monday, no longer free to the public. If you're interested in taking advantage of the EdgeFinder free week event, it is, like I said, all access. You can use all of our tools, economic data resources, institutional tracking tools, market sentiment, like the put to call ratio. If you would like to use the EdgeFinder for free this week, here's how you can do it. Number one, join our Telegram channel. We're going to drop the link right now to our free Telegram channel to where you can apply to the EdgeFinder free week. Okay. So number one, join the Telegram right now. We'll drop the link. Take a second, join the Telegram. And in just a second, let me pull this up, make sure we've got it. Okay. Yep. Julie's got it in there for us, guys. EdgeFinder free week. Hit the link in there. Fill out that quick form to request access to the EdgeFinder for the free week. Okay? There is your chance. We do this very rarely, okay? This week, we are doing an opportunity for people to try out the tool. We have added so many powerful features. This thing is next level right now. We've added so many cool things, and the team has done a great job piecing that together. This is your chance to try it out for a full week, completely free. All you have to do, like I said, join the Telegram, fill out that form, request your access to the EdgeFinder for the free week. Tiger says, having the EdgeFinder free the last time is the whole reason I became a paid customer. I can't beat it. Tiger, that's awesome, man. Thank you for that feedback. That's why we do it. I mean, we don't do it that often, but we did a free week several months ago. It does lead to a lot of people who are serious traders. Here's the problem, right? Here's my warning. Here's my disclaimer. Guys, if you try out the EdgeFinder this week, you're not going to want to trade without it. That's the problem. And that's our marketing here, right? You're going to try out the EdgeFinder and you're going to see, holy crap, that thing is so cool. And then you're not going to be able to live without it. So there's your chance. Okay. Tread with caution. If you use the EdgeFinder this week, the problem is you're going to find out how awesome it is. Anyways, guys, we got about 5 minutes here before PMI data comes out in 6 minutes, actually. Let's take a look and see where we are at pre-market or pre-news event. Got Bitcoin up here a little bit. How's our euro US dollar? Somebody pointed out that it's not quite there, man. I want to be long the euro against the dollar. I want to be long the pound against the dollar, but I'm trying to just hold my, sit on my hands for a little bit longer here, see if I can get just one more flush down, right? Just to give me some confirmation, right? We've got, I illustrated this in my weekend video, the Sunday video, right? That I'd like a break through those structure, bounce back, any kind of sign like this, I'm probably going to go long the euro. We have EdgeFinder confirmation on this. He's luring us. Nick has top tier marketing skills. Be careful. I'm telling you, if you take advantage of the free week, you're going to say, dang, this Nick dude, he's a cunning salesman. He's a traveling snake oil salesman. I'm just kidding. No, it's genuinely a really powerful tool. And one of the coolest things about the EdgeFinder, here's some good marketing for you that is genuinely honest. The tool has gotten so good because we constantly survey and improve the tool based on what our customer experiences tell us. So this week, when you're trying the EdgeFinder for free, please do us a big favor. Let us know what you think we can improve. Comment it on my videos. I read comments every single morning, day, night. I read every comment that comes on my YouTube channel. So if you have feedback for the EdgeFinder, comment it. Let me know, what can I do to make this thing better for you as a customer or as a viewer. That is why the tool's gotten so good, is I think we have a really good pulse on our community of users for the EdgeFinder. It genuinely, I think, is part of the reason it's been such a success, has been we listen intently to what the crowd says they want, and we do more of that. Right? If you're like, man, I really struggle with fundamentals because they're challenging, they're a lot to learn, there's a big learning curve to this, great. Check out the economic heat map, which simplifies the whole process of fundamentals. If you're like, I don't really understand manufacturing PMIs, okay, great, I got a video for you on that, but also I've got a surprise index and an impact on US stocks and US dollar to help you understand what that PMI actually means for the markets. We then summarize it to make it easy to understand how economic data is falling and what that means for you as a trader. You know, you as a trader, right? I'm a trader, you're a trader. This thing is truly built by traders for traders. I want to know, without having to go through 17 articles today, what the US economy is looking like so that I can make better informed decisions about gold, so I can trade currencies better, so I can trade indices better. I got to have that data mapped out in front of me in a simple view. I don't have time to go put all this in a spreadsheet and journal this all manually. Heck no, right? I got trades to find. So showcase the data for me in a way that I can easily understand without having to pick apart and do a full research paper just to understand the state of the economy. Make it simple. That's what people wanted. That's what we built. That's the idea. The EdgeFinder is, again, completely built with regards to what our customers tell us they're struggling with and what they need more help in. That is how the EdgeFinder has gotten to where it's at. Guys, we've got about just about 2.5 minutes here. So I'm going to go ahead and just switch over to our all unsaved changes. If you open a new, your recent changes will be lost. Okay, fine. All right. So stocks are up here this morning. We're ripping, which is awesome. Really nice start to the week. Dollar index is up a little bit, possibly off of some softness in European numbers, but maybe not too much because oil's come down a little bit, come back a little bit. But guys, we got about 2 minutes here to go before we get PMI numbers for the United States, which is, of course, potentially going to be impactful to this screening here, but more importantly, to the US dollar, to gold, to indices, to commodities. This is likely to be market moving. I want to just ask real quick, if you could do me a favor, hit the thumbs up button on the stream if you haven't already. It does support our work here, and we really appreciate spreading the word about what we're doing here on the channel, trying to keep people focused on the fundamentals, focused on risk management, simple technicals. That is what we preach over and over on this show. If you watch around, you'll see other guests come on and host the show. It's the same thing, right? Fundamentals primarily are a theme on this channel, whether it's me or someone else coming on, but also simple technicals, keeping it rudimentary. We don't need to get all fancy with technicals. We keep things simple around here, and we focus on the core principles that make traders profitable: risk management, good trading psychology, simple technical analysis, and thorough, informed fundamental analysis so that we can track the trends that are really happening in this market. Okay, we've got just about 1 minute to go here before our PMI numbers come into the picture. Again, this is going to be just to recap what we're looking out here for. We've got the manufacturing PMIs and services PMIs coming in for the United States. This will give us an indication as to how key hiring people and decision-making people in the U.S. economy are feeling about the future of the manufacturing and services component of the U.S. economy. So stay tuned. We got about 20 seconds to go here. And we're going to go ahead and roll our quick breaking news. All right, let's see what the number is. A1 is a beast. I appreciate you. All right, numbers should be coming out here momentarily. Initial reaction here is not too much in either direction. Gold is slightly lower, dollar slightly higher, stocks mixed. Okay, so manufacturing came in a little bit soft, but services upbeat. And this is what you want to pay attention to, is really the services, because I know that we want to do a lot of manufacturing onshoring here in the United States. That's a theme this year. But manufacturing is still a small component of the US economy at this time in relation to services. Services is the big one, and we see some nice upbeat expectations for forward-looking indications of the services part of the economy. So that's a positive figure. Now, overall, you can see stocks are higher here overall. Dollar index strong because, again, at the end of the day, strong services PMIs are going to trump manufacturing PMIs because, again, it is such a core component to our economy. So think about this, guys. The U.S. economy is not really, I know Trump and team want to bring more manufacturing back to the United States, but that's not here and now the majority of what we do. We build technology companies, we do software companies, right? We're a services-based economy, banking, all the things that U.S. does big time. And those parts of the economy are signaling some forward-looking strength according to our services PMI data. So positive number, guys. To help us out with this, we've got Ivan joining the call here in just a moment, where we'll be seeing what he has to say about some markets here. So we'll bring in Ivan in just a second, but before we do that, we're going to just roll a quick break to thank our sponsors, and then Ivan and I will be on camera together. We'll get that set up here in just a sec. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, he's back. He's here. Ivan, how you doing, man?
Doing good.
Good to have you back on the show. And we just had some strong numbers for the US. Well, manufacturing was a little bit soft, but services better than expected. What's your reaction to this?
Silence. I don't know. Shouldn't it be dollar strength?
I would think so.
Well, I made a theory earlier. We should come down to 103.75. So I don't like this reaction. But yeah. 54 is strong, or ever so slightly, but that's strong.
It is. Yeah, that's a pretty upbeat number. 54.3 compared to 51.2 expected. I mean, that shows some upbeat forecasts for services. Manufacturing missed a little bit, but as we were just discussing before you joined, Ivan, the U.S. economy mostly is based around services. So it's the larger piece of the puzzle, if you will, showing some upbeat strength. And yeah, dollar's looking strong. Where does this set us up for this week? Are you looking at dollar long positions? Do you already have any dollar long positions?
Yeah, I don't. But yeah, I'm looking for dollar bullish. The only reason for that is we can't be bearish for the entire time of the year. You know, you have to have something going on out there. I don't know why I became southern all of a sudden. But yeah, I'm looking for New Zealand dollar short. Okay. More like the 57.80 levels-ish. So we are a bit like, I don't know, 50 pips away from that. So yeah.
Gotcha. So you were looking for the dollar index come down a little bit, potentially giving you that entry on Kiwi dollar shorts. Got it. Any other ones? Are you looking at euro at all? What do you? Yeah, that's one I want to ask you about. What about the euro and the pound? Are you interested? Would you short those against the dollar or not so much?
Are you nuts? Like, are you crazy? Like like pound. Now, pound has been showing a lot of strength because they have inflation at about 3%. Is growing.
Yep.
They have a bit of a growing economy more than Europe. Europe, to me, is well. They had the increase of 800 billion euros into spending. So, those are probably my worst ones that
Yep.
I would ever take because they have a lot of pump, and I don't know if it's pump or dump, but at least a pump of money into it. So that should strengthen them going
Well,
forward.
well, that's what I was going to ask you about, Ivan. Or that's why I asked you that, is because those
Yeah,
two currencies specifically seem to kind of be having a bit of a revival in strength that they haven't seen in some time. Big government spending on military contracts and flooding into the, anytime you have a bunch of money flooding into the system, it typically, or the idea is that it could cause some stimulus to the underlying economies. So yeah, I like your idea. Like if you were going to be dollar bullish, this is the cool thing about Forex is you can select which currency versus which currency. So if you like the dollar, well, you have the choice now to go, well, maybe I want to go long dollar against the Japanese yen or the Canadian dollar or the Australian dollar. You have these choices. So you like Kiwi specifically. What about Kiwi do you think is more bearish? Do you think their central bank is a bit dovish, or is it the commodity currency concept? What are you thinking?
just negative growth. I
Mm-hmm.
think it is. Is it 3 months, 3 quarters in a row now?
Mm-hmm.
Inflation is about 2.2%. Business confidence and consumer confidence is pretty horrible at the moment. So it's just a general state of the economy, to be honest with you. China, if China does well, that would send the New Zealand, Australian higher. But I guess I'm betting that China is going to have a horrible time at the office with the trade wars.
That's a good point too. You can't. The thing about the Australian dollar and the Kiwi dollar, for those who are maybe less familiar with this, is that they are huge trade partners. Well, they're very commodity centric economies. These parts of the world, they export a whole lot of raw materials. In fact, that's like the bulk of the Australian economy. I think it's the same with New Zealand. They have very similar kind of economies.
Mm.
But the point there that you just made, Ivan, for those not familiar, is that if there's a slowdown in China or a boom in China, these currencies, there's some correlation there because a strong China typically means a stronger Australian dollar because they experience a lot of growth from the high demand of raw materials, which they provide. And conversely, if there's tariff troubles and China struggles, then we may actually see the demand for these currencies wane a little bit. So,
Mm.
good points to think about. With the here's another question for you, Ivan. I think this is the topic of the week, really. I mean, we saw Jerome Powell speak a little soft on tariffs last week. We saw him not too worried about the inflation side of the mandate, all that kind of stuff that happened last week. But we're now kind of coming down to the wire with that April 2nd deadline with reciprocal tariffs. How do you treat, like, as a trader, how do you approach the currency market or whatever trading market you're looking at right now? How do you approach that with a big looming deadline like that from Trump? Is there trades that you place based on that? Do you stay out of the way? How do you approach a time like that?
To be honest with you, I do two things. I do what happened last time we had such a situation on the pairs that I'm trading. So not only am I trading Aussie, but I'm also trading dollar, right?
Mhm.
So of course it's a dollar trade and a dollar thing, but also with, for example, if you look at like randomly Euro New Zealand also mm, had a reaction out of it. So and it kept making Euro New Zealand going higher. So even though if I trade your dollar would be it going to the higher side, I will be cautious about selling Aussie dollar and New Zealand dollar against the US dollar. And I would know that's not a great thing for me. So I would hope and presume that that wouldn't happen. So I would lower my risk lot size. I would do actual steps to reduce my risk until that risk is kind of gone or weaned out, meaning there is no more either risk for increase in tariffs or if they just take them away in total. But what happened back in March, beginning of March, 4th of March, was that it increased. They kept giving each other new tariffs, and they kept finding new countries to give tariffs. And we have to have the same escalation for us to find the same moves again. Again, if I'm late to the party, there's always a pullback.
Sure. Yeah, no, I think, and that's, I guess, too, the trouble with this, or the trickiness with the tariff stuff, is the market's kind of telling you that a weaker dollar is the response to, uncertainty in tariffs, which I think is interesting. I could have seen a case where tariffs concerning inflation make the dollar go up. But what this is really telling us, Ivan, and I'm curious your thoughts on this, is actually that the concern is not inflation from tariffs, that the concern is growth. Because if the concern was inflation, the dollar probably would go up, right? If the idea is like, oh, this is going to be massive inflation turmoil and the Fed's never going to be able to cut rates now, the dollar would be, I think, higher. But instead, what the market is now telling you, which is what it also told you in 2018 when we saw tariffs, is that it's not a big, massive inflation fear per se. It's more so, and this seemed relevant to what Jerome Powell was saying last week, is it's more of a concern for growth than it is for inflation. I mean, it's potentially recessionary, especially for places like Canada and Mexico, who have large dependencies on the United States economy for their exporting stuff. If they get slapped with massive tariffs, there's a solid possibility those countries could go into recession, and that is it's like a sickness. It's contagious, right? Recession is contagious. So I don't know. I think here's my thought on it. I think that there might be some resolutions coming with the tariffs. I think that everybody knows how devastating they could be. And if there is resolution, I actually think that could actually be dollar bullish in a weird way.
Yeah, potentially. But I guess I was surprised by, because what I saw, or what I didn't see probably, is that tariffs in general is inflationary, because you take away a product and then whatever available product is left in the economy is at a higher price, generally speaking.
Right.
But what the market did instead, and said, since we're going to have so much removal of products, that's going to lead to recession, because people are going to go out of business. And I think that also talks a bit about how the market feels about how fragile we are as an economy. Yes, we have fallen down a bit from 9% inflation or so down to 2 or 3%, and that we might even drop down to, not down to 1%, but drop quite more. And then we are on the other side of the pendulum, where we are no longer only falling a bit, we are falling quite hard, because the rug pull that I would argue the tariffs did is going to have catastrophic consequences for certain businesses. And I guess what I underestimated was that the market believed that it was much more market-wide, and not as individual as I thought it would be, as to just businesses here and there instead of the entire society and the entire economy. Sorry.
It's challenging because the concept of tariffs, what you really get into is like, okay, first of all, we don't know how certain anything is with tariffs. Like they could be coming, they could also be resolved. I actually think, so when I say dollar, let me clarify what I said too about the dollar. I said, I think that resolutions could be bullish for the dollar. I think they're the bullish for the dollar if and only if the resolutions are tilted in favor of the United States. Here's why. If we see, negotiations happen where Canada, Mexico come and they basically yield something to Trump, it's going to set a precedent of US dominance, right? That's
Mm.
what Trump wants. Trump wants to renegotiate and win out on trade relations with allies. That's his idea, right? So if that happens, the market is going to say, okay, so Trump's in the driver's seat. He can tell other countries what the trade relation is going to look like. If he can't, right? If there's not that scenario, if there's concession by the U.S. by Trump, and some stepping down, some backpedaling, the dollar could actually look weak as it tilts the strength into the favor of those who stand against Trump, right? The pushback on Trump. So I kind of lean towards, I think that other countries are going to have to sort of just say, look, the US is such a ginormous consumer. It's our buyer to everything that we export. We've got to find a resolution. I kind of lean towards, in the short run, getting a little bit of a bump in the dollar. That being said, I'm not super long-term bullish on the dollar, but I do think we've had a really big sell-off on the dollar. There is still inflation stickiness, but I think that the growth concerns are the real thing about tariffs. But we'll see. I mean, it's an interesting time, and with that April 2nd deadline just around the corner, that's pretty close to it. And I think that a lot of people have probably already sold out, gotten scared. We're seeing the bounce back in stocks too, Ivan. I've been talking about this quite a bit, is everybody sold because they were fearful. And a lot of times when you have a big fear event, the market actually bottoms out before the fear event because people assume the worst is going to happen. And what actually usually happens is less scary than feared. And so with Friday, we saw Trump say what? He said, there's a little bit of flexibility. And that flexibility call is, like I said, it's helping the stock market bounce back pretty sharply today.
I think that I'm just trying to find 2018. But what I think services PMI was surprisingly strong. And that does not reflect the current economic that we are seeing, as you've been mentioning a couple of times. The heat map is ever so slightly showing a lot of, I haven't loaded it right now, but has showing a lot of weakness to it, or ever so slightly more red than before. Mm-hmm. So I would argue that it's maybe a breath of fresh air, a bit of we still have some things, and that proves the market wrong about short or sending the stock market lower, sending the dollar lower, because yeah, I would argue that even though it's not for the intended period, it's not for the correct period yet, it's the next numbers we have to look at. But so far, it seems promising at least. But I would also argue that market just took. I don't know if it's a rug pull per se, but they just proved who's the boss. And if you can't survive, if you don't have the risk management, if you don't know what you're doing, you get lost. And haha, look at you, blah blah. We're going back up higher again. You freaked out. You are weak. Kind of.
It's a weird thing that happens in markets, and it happens so often. And it's fascinating too. I'll show my screen here. Check out this. This is the AAII Investor Sentiment Survey. I've been really beating this into I've been really repeating myself a lot, but this is important stuff. And I can't emphasize it enough because we've observed this time and time again. Everybody got bearish on the stock market. And to their credit, this was not, just because this was extreme bearish here, that did not signal the bottom, right? We still had more to go to the downside. But with 4 consecutive weeks at incredible bearish sentiment in the markets, to me, it's like when everybody's on one side of the boat, what happens is that when everybody rushes the other side, the boat flips real quick. And I think that's kind of what is happening is everybody assumed that tariffs might cause this giant recession and that the world is ending. And while there may actually be some serious ramifications, that we may actually see some slowdown, the problem what the market does is it jumps to the worst possible scenario. And oftentimes, like I said, everyone's worst fear doesn't actually actualize. So I think that might be what we're seeing. Do I think that means the market's just going to rip all the way back up, no problem? Not necessarily. I still think there's a lot of uncertainty with Donald Trump and with what's going on, and whether or not there is a potential slowdown in the economy happening. I still think there's stuff we have to figure out. But the risk to reward, when everybody gets so bearish, you start to see these technical breakouts. To me, that looks like a really good opportunity to start looking for constructive longs. But we'll see. It's again, when everybody's scared one side of the boat, it gets really interesting. We saw the same thing in the put to call ratio, showing a huge amount of people out there buying puts, buying protection, making bearish bets on the market. And that ended up actually being a really good timing signal once more. This spike up was like the perfect signal that the market was nearing a low. So really interesting. We'll see if that low can hold, but for now, seems to have been a really nice little bounce back move. We'll see if it can last for the next couple days.
Yeah, but what somebody said, I think it was Bullet, said that it was like, what's 10% of a fall in the stock market? Like, that's nothing. But the whole point is it does, and I don't know everyone's position. I don't know everyone who has been trading, but it creates a lot of fear and a lot of uncertainty within yourself. When, okay, maybe for that matter, somebody bought anything in 2025, they are in loss, and it went all the way back down to whoever bought after September 2024. So in the entirety of the presidency of Donald Trump's second term, you are now in a loss, and loss does something to people.
Yeah.
For those who are new or not seasoned, it creates a lot of emotions, and then you start doing, I'm sorry to say these next words, but you start doing bad decisions because you don't think clearly, because this might go to zero. And in some cases it does, in most cases it doesn't. And that's when you have to think about, okay, what's the statistics for the next 10 years? You actually have 100% chance of making money out of it. So there's that.
Yeah. No, it's a good point. And I think, Ivan, a couple weeks back, we discussed together the concept of like the wealth effect, right? The concept of like the consumer is very sensitive, specifically the upper end, the affluent consumer is very sensitive to what the stock market's doing. People who are buying houses and cars and, people who are in the wealthy class make up a huge amount of the spending that goes on within the economy. And those are the people that also have big stock market portfolios, and they feel the effects of what's happening in that portfolio. So if the market drops and drops and drops, they start to get nervous. They start to not take a second house, loan or something like that, or buy a car or go on vacations. They start pulling back on that spending. But that's why it's also important, even if you don't watch the stock market, even if you watch, currency pairs, etc. Stock market's a really good indicator of the sentiment of, investors, the consumer, the wealthy consumer specifically. It's a really real feeling. When your portfolio's up, you feel better. When your portfolio's down, you feel worse.
And horrible when it goes down. And some people haven't even looked at their 401k until it drops, and then you're like, "Wow, what's going on here?" Now I saw a social media post. I'm not going to say if it's true or not, but I think it's quite funny. Apparently, that DoorDash is offering payment plans.
Ivan, why you gotta scare me like this? Why do you have to say that to me?
What is going on?
That's actually scary.
Is America crazy again?
I saw that too, Ivan. I went to I can't remember what it was. It might have been like a Panera, or there was like some dine-in restaurant that I was in, and there was legitimately like a Klarna or a firm, something that you could pay at checkout. And I was like, that is actually genuinely terrifying. People are out there taking payment plans to have a meal. What's going on?
Only is it a terrible financial decision, but you don't have money in the account for. I would argue that going DoorDash is a bit of extra money than just doing it yourself. Even if you can do it, you can take your legs. Lexitas, those works every time. I don't know about you guys, but we do that in Europe. So yeah, it
We don't do that here, Ivan. We're too fat for that here in the US.
Like it's just around the corner. How far? Well, about 5K.
No, it is expensive. I mean, I think if I ever order DoorDash, usually it's like, okay, let's say the meal costs $14, $13, $14, and then with DoorDash it's like 23. So it is expensive. It adds a significant chunk to the cost of ordering food. I don't really do it all that often, partially because it's expensive, but also partially because I'd rather just go walk some, or not walk somewhere necessarily. I don't like to walk here. I'm an American, but but I do like to actually prefer to go to a place.
Okay, this is very off topic here, but on a Sunday, what do you do on a Sunday? You don't do like a 10K walk or something in the forest, like in the park, like something like that.
I usually wake up and forage in the woods for a couple hours, usually hunt and gather, and then I eat my lunch. No, I'm just kidding. Yesterday, you know, I spent I spent all weekend just working. I don't know where you are, Ivan. Are you in Kenya right now or Norway?
Norway.
Okay.
Yeah.
So is it starting to warm up a little bit there?
Yeah, it's about 10 degrees right now, so that's 40 something. That's t-shirt
Okay.
weather, by the way.
Yeah, for you guys, that's not so bad. For me, that'd be pretty
that's
cold. But yeah,
cool.
this weekend I spent a whole bunch of time like working in the yard, just getting the grass ready, just all that stuff. So it was actually nice outside this weekend. So I know we're off topic, but that was my weekend. It was refreshing. Do you like doing, Ivan? I feel like you would be a guy that would take care of your yard. Do you like doing yard work?
Yeah, I chopped real trees on the Saturday.
Nice,
Black
awesome.
timber. So yeah, you need to get your hands dirty.
Yeah.
But it's as a serious thing though, it really takes you out physically. That's really important for me because if I don't get physically exhausted somehow, somewhere around the week, I'll get crazy. That'd do
I'm
bad
the
trades.
same way.
So that's very important for my trading, actually.
I like to like run and you know, do work outside in the house. Like I'm the same way. Like that also is just so good for the brain. So good to have some exercise, some clarity. And this weekend there was just fresh air, so nice outside. Anyways,
Gold.
yeah, why not? Always gold. What are your thoughts on gold?
That everyone is talking about it, and I can't care. I don't know. Maybe it should change some fumes that I still inhale because, well, I don't know. It's too high. Oh, it's going to be too high.
It's just been a perpetual uptrend the last few months. I mean, just constantly. I actually had a long position. I ended up getting trailed out on Friday, so I went long over here, trailed out. I'd like to get back into it, but I think I'd probably have to wait for a pullback. It's been such a one-shot move, which is awesome. I think it could keep going, but for me personally, and I know you as well, Ivan, we've got to wait for pullbacks in order to get good risk reward setups.
Yeah, yeah. But then it goes higher highs, and it goes to 5,000. Then it goes to 3,500, and then you lost that one. Then it goes to 4,000, and I saw what's your post on YouTube or something.
Mm-hmm.
Like it always makes like a new higher high when you think it can't go higher. It keeps getting higher. These can keep getting higher. I think I've always been bullish on it, not always, but in the past, year or so. So yeah, I think it can still continue as a trading opportunity. I can't give two hoots because I don't see the setup. Unless I bought it when it came down at 3,000, even though that's still sky high. I don't know. Maybe I should join the International Space Station and see if they have some better opportunities. Other than that,
because that's how high gold is. I get it. No, it's been just a one-shot move, and I think, like I said, the thing is, we've done this for a long time, and there's always something that's moving like this. There's always something that's just moving up like this, and it just seems like it's never going to stop going in that direction. And eventually it does, but oftentimes the market will shock you at how far it can really go. And gold has already done that here recently. I mean, that's been just an incredible move. But please understand, to somebody who's listening who has a giant leverage short position on gold and is praying to God that it goes down, please understand this thing can keep going. And if your system is just saying, or your approach right now is just like hoping that gold is going to go down, look, it might, but it also has historically done this where it just rips and goes and goes and goes. And trying to call the top on gold is so difficult when it's in these crazy uptrend moves. I mean, you can think you're getting the top and then it just rips for another month and a half. So again, I'm not saying it's necessarily guaranteed to keep going higher, but do not be surprised if this thing moves higher. Like I said, I like the idea of longs on gold. I've got to wait for pullbacks. I don't necessarily even think that pullback's going to happen. I would love it if it does, but I think it's probably just going to keep ripping.
This is not financial advice whatsoever, but I think it's easier to buy a gold bar as a physical, holding it in your hand kind of a thing, more than trading the ETF or the or the actual contract. I think it's easy to just go and buy something physical because you can't sell it. Like you have to go back to the shore to just up and then sell it at a loss. You always feel like, I'm not going to sell. And then you're going to hold it for a longer time than if it's just in your computer, some virtual money somewhere, going somewhere.
And that's been a great, this is kind of a crazy thing, is in the last 10 years, gold has done phenomenal. In the last 5 years, I think gold has kept up with or even maybe outpaced the S&P 500. It's kind of close. So the point is, in the US, Ivan, this is an interesting phenomenon. In the US, we don't talk about gold very much as an investment. In fact, it's you barely ever hear, all you ever hear is US stocks, US bonds. That's all you ever hear. But from my understanding, from listening to, audience members, in other parts of the world, gold is understood as an investment. It's weird. In the US, we don't look at gold as an investment, but it is an investment. It's something that has performed really, really well over the very, very long term. I think it sometimes in the last, 100 years or so gets outshined, I suppose, by the US stock market for US people. But for people outside of the US who are more familiar with cases of hyperinflation and their stock markets are not going up every day like the US stock market, right? I think gold becomes a more realistic, and as you've just mentioned it, buying it and physically holding it, for example, is really popular in parts of Asia, like India. That's something they understand, right? They buy physical gold and it's an investment. They hold on to it. It safe holds their money over the long term.
I would argue that also in emerging economies where you have much higher inflation, and if I can just move that and do invert it, there we go. Thank you very much. So if you look at what this is, gold. Okay, it's just destroyed everything. This is gold, and this is about S&P 500, the red one. So in this case, apparently gold has done better than the S&P 500. But for someone who has, let's say the Canadian shilling for that matter, it has gone from 100 shillings for a dollar to 170 and then down to 130. For you to just hold gold, you get the dollar appreciation as well as the gold appreciation. You get a double value. So by the time you invested back in 2022, back in 2020, you are at a much better advantage point than if you just held your own currency. So, and also I was trying to do a Turkish lira, which has gone absolutely toilet since we talked. Not last time about it, but it's now down 30. I don't know how many percent is down, but it's down a lot ever since I looked into it last time. So that's about negative 180% or so. Again, failed economy. If I was a Turkish person, I would be like, maybe gold is a better thing than the Turkish lira. So yeah.
Yep. All good points, especially in a country, like Turkey, which has experienced some really painful high inflation. So, and there are many other countries, Venezuela, places like that. But Ivan, we're getting kicked out. We've
All right.
got our next show host taken over here in a second. Before we move on to Chris Pulver, let me just thank you, Ivan, for coming on, but also to everybody who's listening, guys. Take a second to go subscribe to Ivan on YouTube if you have not already. His channel's just been linked in the chat. You can find him at Ivan FXW on YouTube. Check him out there. Keep up to date with what he's looking at and watching in markets. He also does offer one-on-one coaching. If that's something that you're interested in, you can click his link to go to his channel and find ways to contact him there in the about section or in his comments or his descriptions, all that stuff. So, Ivan, thank you very much for coming on to the show today, man.
Thank you very much for having me.
See ya. Okay, guys, up next, we got Chris Pulver taking over the show, talking a little bit more markets. Up today, stocks pretty good bounce back. NASDAQ up 1.8, S&P 1.5. Silver's kind of flat, gold's kind of flat, dollar's flat. But to take it from here, we got Chris Pulver going to be hosting and taking a look at some markets with you guys. Before I go, remember, we are doing EdgeFinder Free Week. If you just tuned into the stream here recently, this week we are doing a free access period to the EdgeFinder. That is correct. We are literally allowing everyone to use the EdgeFinder for free during this week. If you don't have a copy already, here's how you can get access. You got to join our Telegram. So join the Telegram, completely free to join. Then look for this post, click this link to fill out the form, and then you will get access to the EdgeFinder for a week for free. That period ends, this says March 28th, but we're actually going to extend it to the 31st. So there's your chance to try out the EdgeFinder. Enjoy it. Do me a favor. If you try out the EdgeFinder this week, please send us some feedback. Drop a comment on the YouTube channel. Message me on Discord, message me on Telegram, message me on, actually, I don't really use Telegram for messaging, so don't message me on Telegram because it's probably a scammer, so be careful. But yeah, drop a comment on the YouTube channel. It's the best way to give me some feedback, give my team some feedback on how we can continuously improve this tool to be the best thing for traders looking to bring macro fundamental analysis into their trading, as well as sentiment data, institutional tracking, retail sentiment, put to call ratios. We got some powerful tools for the retail trader. Let us know your feedback and don't miss the opportunity to try it out for free this week in our free Telegram channel. All right, guys, up next, Chris Pulver taking over the show. We'll be right back after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? How we doing? Happy Monday. Good Monday indeed. So a lot of trade management going on today. This is part of the plan of kind of enjoying some of these short-term trades, enjoying some of these planned trades I've had since the beginning of the year where I had some hedges. I worked out well. I was positioning for this larger cushion, which we got. Now the market is responding back. Some of the key technical levels that I'm watching, we are above the 30% zone with today's gap, so I think that's a good sign. That's a pretty encouraging level to get above this 30%. This is the SPY on the 4-hour time frame. Let me go to the daily really quickly. So the daily, the nice thing about today's price is we are above the 200-day moving average. That is the exponential. So if we get above the 30%, then I'm looking for this to head back into the 38%, possibly with any continuation and traction, getting back into the previous lows here. And that's right around the 50% pullback zone, around 580 to 581. So I'd say a key level based on last week's resistance would be that today, tomorrow, if the market is going to continue just to head higher, or of course the market can stall and then still look for a push higher. I think this is a key level just to see the market fight back for the end of the quarter. Monday's expiration, Q1 expiration. Are we above this low? If so, that's at least the market taking back a little bit of the pain that was caused. We're starting to hear some rumblings with the tariff deadline on April 2nd being more starting negotiation, being more flexible, and it's not just a blanket tariff announcement. It's going to be like individual countries and who we're going to negotiate with. So it sounds like there's a bit of softness from the tone of the Trump administration on tariffs right now. So look, all this has been discussed. I mean, we are pulling back. That is good. We've had some really big sentiment readings that have been, I would say, overblown. 3-4 weeks in a row of this AAII sentiment reading near some of the biggest extremes we've seen. So from February into last week, Wednesday's print, we're looking at like a 38 to 40% differential between bears and bulls. Again, sentiment's not necessarily a signal, but it just shows that this market, even though it's had a 10+% correction, barely over 10%, we're starting to see some of these sentiment readings that are as bad as they've been since like major crisis situations. So this little pullback is not a surprise. I still think this is an opportunity to be looking at your portfolio to de-risk or deleverage, and that's precisely what I'm doing. So a quick example would be, Tesla had a nice little rip. We're trading up to 272 right now. Tesla's already up, $13 on the day. I should have a good looking trade here for Tesla. It was a ratio spread. Right now, this trade for Friday is up a little bit of profit. If all goes well, I mean, there's still a lot of volatility ahead, but by Friday, if we're above 250, I don't take on any assignment. I did take assignment on 3 accounts last weekend. I had a 255 assignment, so this is what I did this morning. I didn't want to be super cute with it. I looked at it as there's income opportunities here on Tesla. I don't know if the bottom is necessarily in, but I went ahead and I know my break even on Tesla is around 247.80, and I sold a 247.50 call for $16.66. I did this on 2 other accounts for $17 and $18. So that brings my break even on the high end. Break even on Tesla high end is $232. So 232.83. If I get it called away at 247.50, I make $1,467 per share or per account. So this account makes $1,467. The other ones that I'm lowering that, but it would go like 229.63 minus 247. So anywhere between $1,500 to $1,700 on those accounts. I'll just round out to the low end at $1,400. And for a quick flipperoo, $1,400 times 3, turn income on Tesla for about $4,200 by Friday. What does price have to do? Stay above 247.50. I think that's doable. I said last week when I was going to get assigned, if it stayed below 255, I'm going to get assigned. What I'm going to do is assess whether or not I want to put a collar trade on or just go out and sell a very aggressive covered call, which is what I did. It was offering, $16 to $18 of credit this morning, so I'm taking it. I get it that the price might be up, and I could just hang in there and hope that it goes up. Look, I think Tesla has all sorts of room in the near term to recover. But I also have these income trades like this one that is for this Friday, that if I turn this into $1.29 profit, I'll take the income on that one, add it to my assigned shares in my repair. This one, if we go a little bit higher, same thing, same. So, potentially I was taking on maybe 200 to 300 shares of Tesla, which I don't really want. So I'm just going to take them in little 100 share chunks. If they're assigned, if they're not assigned, it should work out fine. But that's good. Also had a bunch of trades running. Some longer term iron condors have worked out pretty well. When we had kind of the peak of the sell-off here, once we got into this chunk to the downside, the IV rank was starting to climb quite a bit. So let's go to SPX for a moment. So when we started to drop aggressively, after we stalled here, we started to drop. I started to sell some premium, and a lot of those trades are looking pretty good. So right now, I do want to check on a couple of these accounts. I have some naked puts. This naked put combo is currently up around 85, 76, and 80% respectively. My max profit would be about $1,000. I'm up almost 80% of that. I don't really have to worry about these, but if we go lower, there's going to be some risk on these. To me, 80% of max profit is good enough. Also, buying power, I want to get it back. I'm still raising cash. I got another $230,000 in cash from last week. That's just closing out winners and closing out profit and getting more buying power back, which I think is an important thing to have in 2025. So this little combo here, let me see if I can close out all three of these. Max credit would be 988. And I'm going to see if I can close these down for, let's see, 988 minus $2 would be about 8. Yeah, that's about right. Okay, let me see if I can get this for $1.95. Up the debit just a little bit. Max would be $2, which isn't bad. $1.96. $1.97. Don't make me take the ask price. All right, ask price of $2. $2. Okay. So QQQ. QQQ, that was 3 puts for winners. 988 closed out for 2. All right, so closing that one down and getting back some additional buying power. So those puts are gone. Now I just have this 111 trade. Okay, I'll be watching this one closely. That one's fine. Okay, so that's puts on the Qs, puts on SPY. I just have this one. It's up 80%. Max would be 567. It's up 451. 430 is way down there in the SPY. This is only 90 days out. I doubt the SPY is going to go all the way down to $430. For the SPY to drop to $430, anything is possible. And honestly, if I'm up 80% of the profit, I don't really want to take on the unnecessary risk. But we'd have to have just a absolute astonishing decline to go all the way down to 430. So we'd have to have a 30% decline in the next 90 days from peak to trough. That'd be one of the worst starts probably in history. So I'd say the probability is I don't have to manage the trade, but considering my max profit is 567, I'm up 80% of that already. Take the profit, be capital efficient, move on. Because if I sit on this trade and price sells off again, we get another swell in volatility. I'm not up $452. I'm up a fraction of that, or it has to get closer and closer to expiration. So for this one, same thing. I'll probably just take the profit, move on. Okay, Lee, you mean the bearish trend is still intact? I think we have a rally in a bear market. Bear market's going to be, I don't know. I don't know if we have a bear market. Like bear market was 2022, right? So the proof of that is going to be we go from high to low. We have this as a near-term pullback, and then we flush down for another fresh low. Then we are talking truly bull rally in a bear market, and then that's going to change the narrative quite a bit. If this market flushes down for a fresh low, yeah, then we have a bear market, and we're having more of those bearish claws, and they're getting worse, and I don't know, things get worse before they get better, right? Let's see here. All right, so I'm going to take this put off the table here, 567, close this down for like $1.20, $1.17, not bad. So that was play on the SPY. That was a put. So 567 for $1.17. Close that one out. All right. So today for me is a lot of trade management, profit management. I'm almost back to the highs for the year, which is pretty encouraging considering we're nowhere close to the all-time highs. That's been nice. So this is part of the plan of just trading through whatever the market throws at you, finding good trades, being pretty well diversified. and picking my battles. So want to take advantage of it when I can. Just going to double check on a couple other positions here. So Qs, that one's fine. Okay, so this one's up 80%. I'm just going to take the profit. So 564, closing for $1.14. 564 for $1.14. QQQ. All that was selling a naked put at kind of the height of this volatility push to the downside. SPY. Let's see here. There's a put. Okay, so there's a put for June, up about 80%. This one is a wider credit spread. Oh, that's a hedge. I'm going to put this one as a hedge. There we go. So we got a hedge on for the end of the year just in case. Naked put up about 80%, 568. $568 should be able to close out for $1.17. $1.17. Not bad. Okay. So next account, SPY. This one is my hedge. This one is my naked put. Closing that one down. Good. Qs. This one has a combo puts here. So these are all naked puts during that height of volatility. Group. Naked put combo. April 17. There it is. So these trades are fine. This trade is fine. Watching that one closely. All right, so this one, 988 and closing down for hopefully less than $2. Last one I closed out for $2, which gives me $7.88 of profit. And it might be the same thing here. That is the ask price. $1.99. Save myself one whole penny. Hooray. But buying power. That's what I want back. Okay, so Q's looking good on that naked put combo. SPY closed out. Naked put 569, close it out for profit. Okay, good. And then more to come. All right, a couple more to review. Q's, widespread for June. I took this on like every account. Either I did a widespread. So max profit here, 247, showing up 77%. I mean, again, I might just take the profit. It's like it for me to sit for another 88 days and try to get an extra $50 out of this trade. I'm just going to take the profit. So 247. Close this for hopefully 57 cents or less. Ask us 59. Close at 59. So 247, close out at 59. $188. Happy days. That's Q's. SPY. Similar there, the 440 by 390. Collect the 216, it's up 208. It's going to take the profit. I'm up 96% of my max profit. It's going to take it. Closed. Good on SPY. And then I do have some XSP trades to manage today as well. This one is okay. Let's get these all labeled. Easier to navigate them. Got a bunch of trades running. Looking good for profit. So good stuff there. Okay. Next account, Q's. That one just has it to April. SPX. Close out. Yep. I've got to close out some iron condors. Got to close out some combo trades, bull put spreads. Again, these are good problems to have. Closing out for a bunch of winners, closing out for getting a bunch of cash back, making some profits along the way. Never feels bad. Okay, SPX. I'll close this one down. This is a $5 credit, trading for 137 bucks right now. Closing for hopefully 380. 375. I'll take that winner. $1.25 a contract. And then this one should be trading for like 350 or less. 345. 350 should not be a problem here. Close for profit. Very good. Okay, taking the winner on that one. XSP. Some winners in here. All right, come back to that one. Next up, Q's. Trades fine. SPX. $375 on that one. 345. Nice. So this was for $1.55. This is for $1.25 per contract. Not a bad fill there. SPY. This one is a hedge. That's a bear put spread out to the end of the year. This trade's looking good for April with some partial shares. SPX. Better. Okay, good. Okay. So let me keep working through the accounts really quickly. Not all these trades are in. Some of them are cash accounts, IRA accounts. I had to be a little more creative on taking those trades. This one is looking good for profit though. $370. 375. I closed out on this one a second ago. 375 got filled good. So that's a winner. SPY. This one is a hedge. Okay, that trade's still running. All right. Good there. This one should have some naked puts. Q's. Here's my naked put combo. And then I've got a 1111, same thing. So this one, $9.74, up about 80% of that. Taking the profit, moving on. Closed. SPX. Closing that from $5 down to $3.75. Okay, got a little bonus trap on this one. This one's almost at full profit. This one's part. Let that one go a little bit longer for this week. Okay, so Qs are good. SPX is good. SPY should have some puts as well. This is a hedge. And then this is a naked put. So hedge is in, naked put looks good. This one I own shares on the SPY. Repair trade in this one, I'm up about $2,300, and this is almost full credit on the covered call. I'm up 89% of that covered call that goes out to the end of the month of April. So that gets called away. That's a repair trade I've had going for the last like 60 days. Naked put 569, up about 80%. I'm just going to take the profit. $1.16, taking the winner. Okay, very good. So widespread on that one. Income trade this week. As long as Tesla stays above 250, there's income trade on this one. Stays above 255, stays above 245. Potential assignment risk on one of these chunks. So I think if we stay above 250 this week, that's a good thing. I'll keep an eye on that one for this Friday expiration. There's also a profit trap here, which we'll find out if I get it or not. So we've got NDX trade. This one needs a little bit more time. That's out to a Monday expiration. Qs, those are fine. SPX, this one I can close down. So $5, closing for $3.70, hopefully. Nice. $1.30 winner there. This profit trade looks pretty good. So pulled in 60 cents. Right now it's trading for about $70, which is just a small profit trap in this one for April 17th. So 60 cents should be trading for like a 10-cent credit. So you might get 10 cents credit on this one. This is an SPX trade. So I can either get 10 cents or 5 cents. If I can't get 10, I'll let it hang out there and just pend. SPY. 540 by April. This one's okay. I'm up about 50% of the max profit in this one. I'm going to try to hang on this one a little bit longer. Maybe take the 50%. All right, closing that one down to get some more buying power. Taking the winner. All right. XSP. I'll manage those in a little bit. All right, almost there. We'll get some top down here in a minute. Appreciate everyone just give me the time to look through everything. I've been doing this like literally since opening bell. So just a lot of stuff to look after today. This is a cash account. This one's like super simple, but yeah, just combing through everything. Lift already up a little bit. That's good. Okay. SPX. This one is up a few bucks. Close at 360. Nice little winner there. This one, 60 cents. Pull in that 10-cent credit if I can. Oops. Okay, let's see if I can close these down. All right, got a 5-cent bonus trap on that one. That's fine. Get some buying power back. And this one up 150 bucks. 330. Okay, 170 bucks on that one. Good. With some buying power. Okay, taking a $5 profit trap on that 1111 trade. So pulled in 60 cents, walked away with 65 cents. I'm happy on that one. Cash account's fine. This one, this is a hedge. On this one, run a little bit longer. And one more account. All right, so profit on that trade, profit on that trade. This one's still hanging out a little bit longer. This one hanging out a little bit longer. This one hanging out a little bit longer. Okay, I'll be keeping a close eye on those. And lastly, MicroStrategy up to 324. It's not a bad thing. Qs in profit there with a little bonus trap. In profit here with a little bonus trap. And in profit here with a little bonus trap. Good. All right, so this one is 96 cents. I should be able to close this one up for a little profit winner. This was on a Monday expiration. I'm just going to close this one down for a 5-cent bonus trap, hopefully. I mean, come on, Qs. Ask price is 3, so shouldn't have to go too much lower than that. All right, bonus trap right there. So 96 cents, close it out for 100 bucks. Get some buying power back. This one, this one's out to Monday, 46 cents. And trading for a tiny debit. Let's see if I can get 46 cents. All right, so close it out for 40 cents on 2 contracts. Take the winner, get the buying power back. And then this one up a little bit. I don't mind just taking the profit. It's up about 54% max profit here. I'm just going to take it. For an IRA account, buying power is the most important thing. So I'll take the 50+% winner. Come on, mid price. The heck? 50 cents. All right, filled at 27. So just under 50% winner in there one. Okay, so I still have to manage a bunch of XSP trades. I'll do that offline. Let's get going for a little top down here. Appreciate everyone's patience. This is, all is well. I mean, it could be a lot worse. We could still be navigating this downturn. I think a lot of this little relief rally is just based on, overblown sentiment, a little bit of softening narrative, a little bit more quiet on the tariff side, not as much like retaliation and just hammering that down the media pipeline. Also, I mean, I listened to a lot of good content this weekend, kind of get the case for both a bear case. Here's what I didn't hear. I didn't hear a bullish case for dramatically all-time highs this year. I know a lot of smart macro analysts that were talking for, like a 6,200 target this year, 63, 6,400 target the year. A lot of the changes in, analyst targets for the S&P this year is based on earnings compression. So the one thing that's going to keep the markets pretty resilient would be continuous consumer spending and earnings that are stable. I think there are downward revisions on earnings, but I think stable earnings, not just this massive like, oh my gosh, we're 10, 15, 20% overvalued on these earnings plays. That would be probably the next like harsh reality check for the market, is if earnings are really revised lower. So the Mag 7 coming down as swiftly as it did, that brought down the overall S&P. One thing as far as this comeback and this pullback, I wouldn't be surprised if the Mags is up today. That doesn't surprise me at all. In fact, on Friday, I talked about this because this to me looked a lot like the Qs. So I was like, well, we're hanging out right here with a little wedge. We have this 200 moving average pullback zone. This is going to be a key spot for the Mags, because if the Mags this week can close above it, then we can certainly have a decent recovery. Where what was kind of beat up, mainly in the tech sector, probably growth momentum took it the hardest over this like 10% correction. It was mostly out of growth, out of momentum, going other defensive spots, but it was beat up so quickly and aggressively that it did make Mag 7 all of a sudden pretty attractive again. So it's okay. I think that's fine. But we pulled right back to the 200 moving average. Is this a bull rally in a bear market? Well, there's resistance points if it is. If this is a high, low, lower, high, lower, low, if this correction just continues to head higher, then this is a bear correction in a bull market. So it's to be determined. But I'd like to see, if you want to see more of a sustained rally by these bulls, getting above this 200 moving average is going to be really important. And that's on Mags, that's on SPY. So SPY, we're just above the 200 moving average right now. I think that's good. I think on Qs, we pulled right back to it, which we did. If we close a little bit higher than that, that is fine. Okay. The Dow also pretty nicely above it, and we're above the 38% zone. So hopefully we are still going to pull back into like maybe the 50% zone going to this April 2nd announcement. April 2nd could turn out to be the buy the rumor, sell the news situation where it could be the bottom is in the tariff talk when it comes to the reality of the markets, April 2nd and onwards. It's already priced in, and the market may go higher April 2nd and forward, right? So that's Dow. Russell making a nice little comeback. I should have some trades running on the Russell that's also looking pretty decent. Russell here has some shares covered out to April. So this trade, okay, these are in profit. This is good. So I might take some profit on this one. IWM. That is a covered call on the shares that I own. That's a 1-1 trade out to May. So the most I can make on this trade is $246. I'm up about 58% of that right now. I mean, I can sit and wait for the next 53 days and hope that small caps get better, or I can just be happy that I'm up 50+%, take the profit, get the buying power back, and let this do what it does. I think I'm just going to do that. I mean, and I say that because if we continue to go higher on the shares that I own, I mean, I'm still going to make about $2,400 on shares that I own, give or take. So this one I don't mind, just a little income trade. Take the profit and move on. For me to wait an extra, 53 days to grab another dollar doesn't really seem like a good use of capital, considering there's nothing below my 190 put. So 246, trading for $1 right now. See if I can just get out of this for $1. Close it out for $1.03. So that's a winner on IWM. So that was 243, 246 to $1.03. So $1.43 was the net profit on that one. $1. Just the shares. This account, no IWM exposure. This account, no IWM exposure. There we go. Right here. Close for $1. $1 not filling. $2. $2 filled. Got it. Do I want a course for options? Yes, I've got a course. I've got 2 courses for options. Give me 60 seconds and I'll share them. Okay, just to make sure I don't have any IWM here. I don't think I do. We're good there. We're good there. Good there. And good there. Okay, good. Yeah, if you are interested in an options course, so I've got a course for $27. It's a quick guide for practical options. I'll share the link. And if you like that course, there's an upgrade to a full course, from 4 videos to 11 videos, 13 strategies. This one has basically 2 to 3 core strategies. So it's a Vimeo on-demand page. I just posted that in the link. And if you like the full course, go practical options, and we'll do the full course. For this full course here that I usually sell for $497, if you are a member of the Pulver Alerts through A1 Trading, this is included. So I'll post it a la carte, or you can up for the Pulver Alerts, and it's included. But I'll post both of them. You can pick, but that's all based on options. So practical options, meaning, I want to get over the learning curve, the jargon, the vocabulary. I get into the charts and I say, if this happens, this is what you need to know, right? If I place this trade in this strategy, what does it mean? I'm actually working on courses for, practical Forex, practical futures, practical stocks, same type of thing, where it's like, what makes it actionable? I don't need to go through Investopedia type definitions and Investopedia type basics where you can find that stuff online. What I'm looking at is, here's what I'm doing in the live markets. Here's what I'm thinking of when I place a trade. The way that I manage capital, it's typically risk defined. I know that if anybody follows like Tasty Trade out there, Tasty Live, their go-to trade is like the strangle. Sell a call, sell a put. It's undefined risk. You go 45 days out, manage at 21 DTE, and it works really well until you have an outlier type risk, and then it busts up your account. You lose weeks and weeks, if not months, of profits. Some traders get super aggressive. Some traders have nasty, ugly drawdowns with outlier moves. I hate undefined risk for that reason. It's not that I don't love the strategies, because they work and they work over and over, and I see it, and I see a lot of traders that do well with it. It's that traders with undefined risk, they have the potential of an outlier event, volatility event, a black swan event, or one single steady direction that they can end up losing, and then you end up having to manage and roll and fight your way through bad trades. I look at it as, look, if it's undefined, if it's defined risk for me, the market can go to infinity or to zero, hypothetically, and I still have what I initially risked on the trade. So that might give me a little bit less flexibility when it comes to like working through trades, but just a one-off trade is something I can manage. Another off trade that I can manage, and I just keep taking thousands of those trades. It works out pretty well. Okay. All right. I've got one more trade running for today that I want to discuss. We'll go a little bit more top down. I put in a trade this morning on SPX for a butterfly, and I pulled about 70 cents credit. It's already trading for about $60, which means my 70-cent credit's probably trading for like a 10-cent debit or so, which is good. So this means my 56.95, as far as the delta, 56.95 is now trading at like a 6 delta. So there is like a 94% chance that this will finish out of the money, which means this trade will be good for the full 70 cents credit. There is a potential profit trap. We'd have to have like a monster. We'd have to take back the entire move today, the gap and everything, in order for that trade to be threatened. So I think what I'm going to do here is, 70 cents credit on the day. If I can just close it down, let me see what this one's trading for. It's trading for about $60 right now. So if I can just take I'll go down to 5 cents. I'll close it at a 5-cent debit and just let it marinate for the day. So my 70 cents, if I close it out for 65-cent net profit, I'll take it. By the end of the day, it might just cash settle and give me the full 70 cents. That's fine. But I'm going to take that. Okay. So all in all, like, today's been pretty fantastic. Up 65 grand on the day. That's a big comeback. I'm back up near, I'm not at the all-time highs, but I'm near for the year. I was at 195, kind of the peak. But what I'm kind of happy about and fairly proud of is we're still 6 to 7% away from the highs, and I am about 1% away, not even 1% away. I'm like 7 grand. So 7,000. I'm 0.2% away from my all-time highs for the year. And we still have, 6 to 7% to go. If we were going to sniff all-time highs again for the year, bring it on. That would be a pleasant surprise. In fact, it might be a good time for me to be invoicing clients if that's the case, because if we're up, 250 to 300 grand for the year, I think it's appropriate. I didn't have any invoicing through the election last year. We had a bunch of profits through Q4, and now kind of surviving Q1 is good. So we'll see. But what I'm preparing for is if we are heading into this 50% zone, that's a lot of support in here. I could see the bears making another case, or at least try to maybe claw back a little bit. But I think a lot of this is a relief rally. I think a lot of this is the quieting on the news front with tariffs. Look, price action like this, price is mostly the sentiment driver. I think the reason this became so extreme and felt so nasty was because sentiment tipped so bearish. But it's this is what the market has to price in. The market isn't just thinking tariffs. The market's thinking, well, if we have tariffs and we have higher inflation, what's the Fed going to do? And what about slower growth? And what about earnings compression? What about revisions? What about unemployment? Like, all these things were getting priced in, like, okay, this could get really, really bad. But labor's been steady. The Fed's been reassuring. The tariff talk has become a little bit softer, and the market's giving this kind of glimmer of hope. Which, again, I think this is, look at your levels, and let's put a pin in this conversation and go out to 30 days from now. If 30 days from now we're still hanging out here, then there's just a lot of indecision. If 30 days from now we are sitting near within a whisker of these all-time highs, then this tariff talk and this tariff tantrum was essentially over, and the market is still showing resiliency, and all is well, right? If this market is lower in the next 30 days, then we are probably in a bull rally in a bear market. And this is likely going to get worse, okay? But as I said, I don't think that Europe and China and everything that's performing so well right now that's non-US will continue to perform so well if the US is going to tip over into a bear market. If the US tips over in a bear market and we all of a sudden have bear market that shows recession, recession, we've seen, if you're following macro analysts out there, their risks of recession have gone from 10 to 20 to 30 to 40%. I've seen as high as 60% risk recession. It doesn't mean anything. I mean, look, even during recessions, the market's open. You're going to trade through it or you're not. So I'm going to trade through it. Whether this market is making all-time highs or making fresh lows, I'm going to trade through it. All right. But the point is, if we're looking at the technicals, this to me is where the bears can step back in and fight. It's coming in. It's coming in close. So this is why I'm using this opportunity to take so many profits and take so many trades off, because if we are going to see another flush lower, I don't want to be sitting here with positions that require a bullish direction. So the positions I've been nibbling at down here are now showing some profit. I'm taking those profits. A lot of them are, 50, 70, 90+% profit. So rather than hoping that I hold this all the way to expiration, I'm going to take the lesser profit instead of going for max profit. I'll take a little chunk of that, but a majority of the profit and not have the risk. Okay. A while ago, you mentioned how you trade gap fills. I didn't actually mention that. I think that, all I've been looking at here for the last couple of weeks is this area is a gap fill from both sides, right? This is the election gap, but you can see that all the support in here even, and that would be a big window for the bears to then say, okay, look, bulls, that was a cute little rally. Now the bears can step back in. Here's why. And, whatever news gets attached to it, we'll find out. But I would say watch your price action carefully in here. This is now, I'd say the bullish gap from today is now a potential target for the bears. Right. So if we push up into this area here, pull back in that like 5-0 zone, that's nice equilibrium going to this like April 2nd tariff discussion. But the bears would be coming after this gap here and this gap here. So I'm not trading that right away, but I wouldn't be shocked to see if the bears do step up that we go after a gap fill. If there's more momentum, they take out that 5,600 low, then that gap right down here to the previous lows we had. Gap 1 gets tested, gap 2 gets tested, and we're no better off than where we started other than being back at the lows again. And that's what I'm saying. Like, this volatility situation could pick up and there's more ahead, but again, I'm thankful for a little bit of a relief rally. The technicals worked out pretty nicely. There's harmonic merge. Like, we've still got a little bit more upside to go, whether it's today, tomorrow. We'll see. Okay, quickly, let's go. I'm just going to be on here for just a few more minutes. Natural gas. Let me go back to the daily chart. So oil is moving off the lows just a little bit. That's fine. I don't have any trade in oil. I'm still long natural gas, and I'll maintain that long position on natural gas. Gold, nice little pullback on gold, as I expected, wanted to see. It's happening. We got now a couple days of some red, which is totally fine. Any type of 21 or 50 period moving average, honestly, that's not enough for me. I know that I say I want to start nibbling on gold if we have some pullback levels. We have central banks buying gold at a record pace, but I would say this 200 moving average is legitimately why I am not bullish on gold right now. I'm not bearish on gold. I don't know what this would have to do for us to find this 200 moving average. We would probably have to see the U.S. would probably have to sell gold, and cash in. If they did that, that would fluctuate gold pretty aggressively. That could be what causes. There could be a myriad of reasons for why it would cause a decline in gold. But technically speaking, this level and this 200 moving average with this distance away, I'm just interested in buying dynamic support. I like positioning for longer term gold bullishness, but I think in the short term, that's why I shorted gold with a futures contract. So my gold futures trade is max profit about $120, and I'm actually somehow showing I'm showing a profit of it's about 96%. Okay. I still have a profit trap. This is looking good. Probability of profit on this one's still pretty darn high. Let me go to the trade on this April 24th contract. What's my April 24th would be here. My bull call spread is the 80 by 85. My put would be it's an 8 delta, which is about a 91 and 92% chance it stays out of the money by the time that expiration rolls around. So I still like the trade. I think there's the high probability of an income trade. That's what I'm doing right there. So that's the trade I'm in. But I still have GLD, I still have PHYS, I still have CEF, I still have some, silver and gold plays that are both looking pretty good. I want to add to both of those on pullbacks. Okay, silver, same thing, really nicely supported off the 200 moving average. Any dips into there, I'm looking to buy more. Bitcoin, nice little rally on Bitcoin, getting up above the 200 moving average, which is important. Okay, it's been, what was breaking below the 200 moving average, now back above it. I think that's important. MicroStrategy, good. I have to wait a little bit longer for my income flip here. For above 310, I get it called away. If we're way above 310, then I'll probably go out an extra week or two and just keep generating some income on the shares that I have. Otherwise, I get it called away for about $50 a share. Coinbase up to 199. I'm going to watch this one for this week. This one should be looking good for profit. There's obviously some volatility ahead. I'm only a few dollars clear, but let me check my coin positions and then I'll wrap it up. So this trade expires on Friday. So right now I've got about $1.08, $1.08 in credit. It's trading for about $21 right now. If we stay above 195 for the week, then this is kind of maxed out. Now, the nice thing is too, is this is going to be like kind of threading the needle here. But if I'm greater than 195, but I'm less than 200, or even if I just stay at 200, which is current price, then there's potentially a $5 trap here plus the $1.08. So I could make $600 on the trade by Friday if it's kind of in that sweet spot. I'm not, begging for that to happen. I just think it'd be nice if it was above 195. I'll take the income trade. Okay. And that should about wrap it up for today. Copper, this one's looking good. This is another reason that I don't think the global economy is headed into a recession. This is part of the reason I also think the U.S. is headed to recession. Copper is the self-proclaimed, Dr. Copper, PhD in economics. If we're in a recession, copper would be lower. If we're not in a recession and there's growth ahead, whether it's one country dominating like U.S. or China, or global growth like we see with China doing well, Europe doing well, we'll give the U.S. a resiliency card, right? The U.S. is not doom and gloom. I think it's a resiliency card. We'll see what things do. But copper is still surging to high. So there is, and copper might be for EV demand. It might be for housing demand. It might be for telecommunications. It might be for AI infrastructure and energy plays. It could be for a lot of reasons. I still like copper for pullbacks. If we're going to stay in this like pretty resilient global economy outlook, then any pullbacks in copper, I think we go to fresh all-time highs. My only concern on copper would be right here. If we hit these highs and we just dramatically drop, then okay, I'll revisit this whole global economy, going to the moon type thing. So if we don't stop here and we just keep going higher, then I think the global economy looks pretty good. And the U.S. needs to stay resilient, and it probably will. Okay, Japanese yen pulling back. Still fine on EWJ, still fine on DXJ. DAX sideways. I think this is a pretty good looking bull flag, to be honest. Look for your dynamic support levels. FTSE, same thing, well supported in these dynamic trend levels, 200 moving average especially. Argentina, nah. China, Brazil. I want to see Brazil get above the 200 moving average. MAGs right back to the 200 moving average. This is an important week. There's obviously a gap fill here on MAGs. If we get above it, that's a good sign. Okay, if the bears claw back, we can fill the gap or try to test the lows. But MAGs was beat up, probably worse than others, just because it was so concentrated. But this combination of either MAGs makes a comeback and lifts the broader market, now that we broaden out a little bit, or the RSP, which is equal weighted, still, from recent high to low, I mean, you're still down 10.3%. So this whole idea of like, by equal weighted, I mean, that's great, but you're still down the exact same pullback amount, right? We had about a 10.3% correction on the SPY. It just looks different. Like this RSP was high, low, lower, high, lower, low. And lo and behold, I mean, I had this yellow box on here drawn to symmetry. Did I not? High, low, lower, high, lower, low. And look at where we turned. I mean, this stuff works. So this so far is pretty darn corrective. I mean, does it come back into the channel? Yeah, sure. Does it get above this channel and have the ability to maybe revisit all-time highs? Yeah, maybe. Right? Or we turn again and we make another low and we have a channel. And all of a sudden, this is the conversation of bull rally in a bear market. But to be determined. So we don't have the evidence yet to say that this is a bear market because we haven't made a fresh low. The way that this one spiked down, we haven't made a fresh low. So this is high, low, lower high, lower low. Yes, bull rally in a bear market. But if this is high, low, and this is just a correction like we had back in August, and this market's going to spend its time here and then consolidating and then going higher, well, that's a cup and handle. That's a reversal pattern. This is why there's so many failed head and shoulders and failed topping patterns, because this market finds a way just to get the cleanse that it needs and then buy the dip. And we don't know, but we're going to find out probably in the next 30 to 60 days whether or not this is a rally that's remaining, remaining momentum gets us back up into, reasonable all-time highs, maybe even sniffing out these all-time highs, or we're back down to the lows and we're going to fight for some other structure support. Okay. Like I said, my biggest concern is that this area breaks. If the bears break this area, I don't want to be super bullish on anything. I would be hedging. I would be doing bear put spreads, bear call spreads. I'd be selling premium and just trying to say, look, we're going to make lower highs and lower lows. It's not going to be easy, but that's probably the path of least resistance if we get there. Some out of the money puts could do really, really well. I just don't know if we have the evidence for that fall. If we have this fall, I think Europe stops going up. I think China stops going up. I think there's so many ramifications on the U.S. falling like this that it'll stall the entire global economy, because that is not just a little correction, right? That is like literally world's biggest consumer, world number one, is now in a recession. And how bad does it get? So not there yet. So, okay. I'll let you go. Thanks for being with us today. We'll see you later this week. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.